let's also welcome on board Gurmeet Chadha, who is joining us on the show right now. Hi Gurmeet, a very good afternoon and thank you so much for your time. But before we start talking stocks with you, Gurmeet, I was just going through one of your social media profiles which says that Sher Puttar, after having Chola Bhatura, it was an image of a lion who was just sleeping and resting. So is that an indication that given the good up move in the markets, one should now take it lightly, take it easy, and maybe have some rest?
Yeah, some of it, yes. I think, see, people who did not do much, did not bother too much about tariffs and border issues and Trump, etc., have actually been rewarded. So I sometimes inactivity is good, but the only thing is that we will continue to see. I mean, the current problems will disappear. Some new problems will come in next 3 to 4 months, and that's the nature of the market. But from broad macro perspective, things are slightly getting better for India. I think crude being at $60 is a huge boost over the medium to long term. Interest rates have come down. System liquidity is positive. RBI has pivoted, and all our high frequency indicators, whether it is PMI, whether it is IIP numbers, whether it is GST, tax collections, are showing some uptick. The earnings season so far, I believe, has been a little soft. I think I would have probably been happy with early double-digit earning growth, but Nifty is around 8.5, and if you see the broader market, the first 600-700 stocks, I think that's about almost around 10%. So if you are at 21 times earnings, I mean, and earning growth, the quarter is just around 10%, then you got to be a little more selective and not get carried away.
Okay, Gurmeet, hi, this is Nehi also joining in. I have also been going through your Twitter because after the tweet Shrishti mentioned, I was also inclined to take a look. And what I was thinking about, and this is something that you have also tweeted about, is the cash position that a lot of fund managers, retail investors, a lot of players in the market have been accumulating recently. But the kind of run up that we've seen over the last week, especially on Monday and on expiry day on Thursday, sitting on cash would have made someone feel really, really bad. So what would be your portfolio strategy going ahead, given that you also have gold that on one hand is cooling off? Indian equities seem to have taken off from here, but we don't know what the road ahead looks like. How would you position cash in your portfolio?
See, each fund manager uses cash differently, and I think there's too much hue and cry being made about mutual funds sitting on 3 lakh crore of cash. And 3 lakh crore of cash is not even 6-7% of the assets the industry manages. So I don't think so. It's a big number, and same guys who were sitting on cash were being praised in February. So cash is always a double-edged sword. But as I said, each to his own. Somebody wants to keep cash for opportunities. Somebody believes in being fully deployed, saying that the mandate is to be in equity. So it's very difficult to figure out who's right, who's wrong. If the market corrects tomorrow, we'll have a very different conversation. But unless the cash is 20-30%, I don't think so that should be a subject of discussion. I think it's more to feel some pockets fund managers are not okay or comfortable with valuations, and sometimes you want to wait for better opportunities in terms of stock booking. I think broad portfolio allocation, I think, as I said, it's good to be a little more balanced right now. US 10-year yield is around 5%, but 30-year yield is around 5%, 10-year yield is upwards of 4.5. And I think this will create a lot of issues in US economy and will probably make the US government do more trade deals earlier and lessen the tariff impact. Also, my sense is Fed will step in with either liquidity infusion or rate cut at some point of time. And some larger shift has to happen. So I think US exceptionalism, their bonds as well as equity have been overowned now for 10-15 years. And I think a large chunk of that will shift both to gold, emerging market bonds, and equities. And as I said, with crude being lower, our fiscal numbers being good, fiscal discipline being there, RBI likely to give a large dividend this week, hopefully maybe close to 3 lakh crore. Our macro picture is looking good. So keep some long duration bonds in the portfolio, maybe 5-10% in gold and silver, and equity be a little more large capish in my view, and gradually build it up. But second half of the year is likely to be better.
All right, so that's the take and the strategy that Gurmeet was discussing. But moving on to an ET Now exclusive then, wherein sources tell your channel that government is reviewing fertilizer supply demand scenario in the country. The centre is also likely to provide additional subsidy if prices continue to rise in the international market. Prakash Priyadarshi has more details on this one. Take it away, Prakash.
The sources are suggesting that the government has reviewed fertilizer demand supply scenario in the country. We're given to understand that the fertilizer ministry has taken stock of the availability of NPK category fertilizer amid rising prices in the international market. DAP prices have increased by more than $100 per ton in the last 2 months, crossing $650 per ton, and that's a matter of concern for the government at this point of time. Discussions are underway, and sources are indicating that the government is likely to provide additional fertilizer subsidy if prices continue to rise in the international market. That will lead to higher fertilizer subsidy allocation for FY26, which is budgeted at 1.68 lakh crore so far. Discussions are underway at the official level, and sources are indicating that the fertilizer ministry may approach the finance ministry for a special financial provision to compensate fertilizer companies if there is shortfall in their margin. However, fertilizer ministry has asked the fertilizer companies to import sufficient fertilizer to maintain availability in the market. And good thing is that the farmers will continue to get fertilizer at affordable prices.
Thanks so much for taking us through that. We'll be keeping you updated on this front as and when we have more details. We've spoken at depth about the chemicals and fertilizers space, so we'll keep you abreast with everything that's happening on that front. But Aditya, let's come to you. I want to get your view on some of these names from the pharma pack that we are seeing. We've had a lot of news flow coming in today for, let's say, the likes of Dr. Reddy's, GlaxoSmithKline, Cipla. Lots of US FDA action happening on the fundamentals, but on the charts, tell us what are these names that you are preferring from the pharma pack right now? What's looking good? Because pharma has also had its fair share of wave coming in on the tariff uncertainty on the Trump front at least. But now we're seeing that pharma is trying to pick up a little bit. Today also amid a subdued market, pharma is doing okay for itself. It's trading with gains of more than 0.5% Nifty Pharma. So what's your outlook on that? And if you had to play this sector, what would your preference be?
So Snehal, definitely play the sector, and I think selective buying can be done as far as pharma space is concerned. I don't think so. All the pharma stocks are looking attractive at current levels, and one should look at the entire pharma gamut as such. Definitely, Divi's Lab stands out within the pharma space, not only because of today's 4.5% up move, but overall the chart structure is very strong, bullish, and a fresh breakout in trade today from that consolidation phase. So I think somewhere around 7,000 is what I'm looking on. Divi's Lab can easily be tested. If we keep aside Divi's Lab, I think so Lupin is also something which is looking very interesting to me, and I think one should take a look at Lupin. It's going through a consolidation phase at the moment. Once that consolidation phase is over, I think Lupin is good to test levels of 2,400. So this is another stock which is looking interesting to me. Apart from that, Torrent Pharma is something which is looking interesting at current levels. I think so Torrent Pharma is again going through some kind of a consolidation phase. Once that consolidation phase is over, you're going to see 3,600 kind of a level in Torrent Pharma as well. And the fourth and the final stock that I really like within the pharma space is Dr. Reddy. After that sharp correction that we had seen in the stock, it's bounced back and come to good levels. I think from here on, stock can gradually inch higher to levels of 1,400 to about 1,500 on the upside. So these are the top 4 bets within the pharma space. I'll not go long on the usual names, which is Sun Pharma, Cipla, and Aurobindo Pharma at current levels. I think they're going through some kind of a consolidation, and maybe some profit taking can also be seen in these stocks. So we'll avoid these 3 large cap names, Sun Pharma, Cipla, and Aurobindo Pharma. Apart from that, the 4 names that I just discussed, we are concrete on them, and I think there's good room on the upside.
Today coming in on the pharma space, but with this fears, it's once again time to slip into a very short break. Don't go anywhere. As we come right back, we will be getting you some of the BTST ideas from our experts and also prep for the market close.
It's missing something. I feel like it needs a frame over.
What's a frame over?
Now that's a frame over.
Stylish frames starting at rupees 800. Over 20 international brands, free eye test. Get your frame over today at Titan Eye Plus.
Welcome back to Closing Trades right here on ET Now. We have a whole host of experts with us who are guiding us and helping us to get your strategy at place when it comes to some of the sectoral preferences, what should be a strategy on index. And Gurmeet, I just wanted to come to you to have your take on pharma space, because just before we did hit the break, Aditya was giving his technical check. But Gurmeet, though Divi's Lab management commentary has been a stellar one, given the fact that the management did not comment anything incremental on the margins, the street is definitely liking their double-digit growth guidance. But from the generic sides, the numbers have been quite okay. Gurmeet, anything that stands out for you within pharma?
So, pharma, you have to break it into 3-4 parts, because it is very complex. So I think on generics, I think till the time US has more clarity on tariffs, I think will continue to be volatile. Although I firmly believe India would eventually gain even in there. So Sun Pharma, I think with now a larger portion of specialty portfolio, should do well. With obviously there will be some near-term hiccups. CDMO is one space we really like. I mean, these numbers were fantastic, both in terms of the CDMO book as well as margins. I think there are molecules worth 40-50,000 crores which are going off patent, and companies which are into novel custom synthesis. Probably, this is like an IT opportunity in 90s, the pharma outsourcing opportunity. US Biosecure Act, though right now hasn't been passed, but it actually names a lot of Chinese companies as far as they want to go about, especially on genetic mapping. So I think pharma outsourcing to me is a huge opportunity coming. A lot of our companies are quite old. They have done a lot of capex in last 3-4 years. And in a lot of these cases, this capex is bigger than what they've done in last 20-30 years. So you can look at something like Laurus, Hikal, Divi's, Newland. There are a host of good players depending on what molecules you're tracking. And then there is, the branded space, which has the likes of Mankind Pharma, which are focusing on consumer health, women fertility, and almost like it works like an FMCG business there. So we are looking at a combination rather than just only, trying to differentiate one stock versus the other. The pharma also, I think the weightage in the Nifty index will go up. We are currently just about 6%. I think it's too low for a country like us, which is so underpenetrated as far as healthcare is concerned.
That's Gurmeet's strategy on the pharma index. Let's move away from that for a bit and talk about BEL. That stock absolutely flat in today's trade, but we have numbers for BEL that will be trickling anytime in now, and Bharat Electronics has been in focus on the back of order inflows and steady growth in the quarter gone by. But let's understand what quarter 4 has shaped up to be like for this defense heavyweight. What can we expect when the numbers finally come out, and what's going to be important parameters to watch out for? Kanishka is joining us with all of those details. Take it away, Kanishka.
Well, Bharat Electronics is slated to announce its Q4 FY25 earnings, and analysts are anticipating a modest top-line growth driven by a strong order book and continued thrust on indigenization. According to Bloomberg estimates, revenue is seen rising almost 4% year-on-year to 8,889 crore rupees. However, the bottom line is expected to see a marginal dip, with profit after tax likely at 1,752 crore rupees, down about 2% year-on-year. Analysts say that execution of large defense programs like Akash Weapon System, LRSAM, Naval Fire Control Systems, EW systems and radars will be key revenue drivers. Also remember, Q4 is seasonally strong for order inflows, with fresh orders likely from the Indian Navy and Air Force. Meanwhile, operationally, EBITDA is estimated at 2,249 crore rupees, a slight decline of about 1.7%, while margins may contract by 140 basis points to 25.3% on account of input cost pressures and project execution dynamics. Some of the key factors to watch include the company's ability to sustain margins, progress on indigenization efforts, execution of large-scale defense projects, and expansion into key export markets. Now, a robust order pipeline and government's Make in India push are expected to support growth in the medium to long term. On that note, let me tell you that Bharat Electronics total order book as on April 1st stood at around 71,650 crore rupees, including an export order book of 30,000 crore rupees. Apart from that, all eyes will be on management commentary for outlook on new order inflow, defense capex trends, and the impact of upcoming policy shifts.
Okay, thanks Kanishka for taking us through all of that. BEL going to be in focus today and tomorrow as well, because we'll have numbers coming out anytime now. But Richard, want to get your sense on what you are making on BEL, along with that some other defense names as well, because the kind of run-up that we have seen in these defense and railway counters last week has been unimaginable. The kind of double-digit moves that we've seen coming over here. Last 1 month itself, BEL is up 21%. Last 5 trading sessions up 10.5%. Tell us what's the outlook going ahead, because so far it was supported fundamentally and a lot of it was coming in from the sentiment value that was building up in the market. But what lies ahead for these defense names and especially BEL?
So I think these positive sentiments are likely to continue for the defense space. We started an uptrend in many of the defense names right from the second half of first half of March month itself, where the stocks such as BEL was there, HAL was there. They started forming that high top, high bottom structure. And now post this, what we have seen after this India-Pakistan, what has happened in last 1.5, 2 weeks, the stocks have given a breakout above the consolidation, and this up move has been supported by very high volumes in many of the defense names. So this high volume activity clearly indicates a good buying interest in much of the defense name, due to which the price-wise downsides would be limited in these names. So I think whether BL is there, HAL is there, or solar industries within this space is there. So I think these are stocks which have started this next leg of uptrend, and any kind of corrections if they come for any reason, I think those should only be used as a good buying opportunity. So overall trend remains positive. Post numbers, if we see any knee-jerk reaction, I think that would be a good buying opportunity for BEL as well.
All right, so that's the take coming in on BEL. The stock will remain in focus on the back of the earnings. But Aditya, just a few minutes left for the market to close, and 25,000 and below is where the Nifty is trading at, while Nifty Bank is showing a bit of a resilience. What do you make out of this? And if somebody is already having some positions on the long side, or rather on the short side, what sort of an adjustment would you advise for?
It's more of a consolidation, Srishti. I won't read too much into today's profit taking, while at the same time I mentioned do keep a close eye on the volatility index, because that is something which is at current levels is a bit worrisome. Sustain above 16, it's trying to hit that 19 mark. On the downside, as far as Nifty 50 is concerned, 24,800 is a very key support zone. So if you're already long on the markets, probably keep a stop loss somewhere around 24,800. If that is taken out on the downside, maybe you can have another 200 point slide from current levels. Otherwise, I don't see any reason to panic just yet till the time we trade below 24,800. And if you're already short on the market, I don't think so you're making too much of a money. Despite that, if you're short on the market, maybe place a stop loss somewhere around 25,000, because that is one resistance which the index is not able to take out decisively. So for shorts, 25,000 should be your stop. For longs, 24,800 should be your stop. For people who have no position, stay like that. Don't take any position in the Nifty 50. Look at stock-specific trading ideas. That is where the chunk of the activity lies. As far as Bank Nifty is concerned, though it's closing somewhere in the positive territory, but again, that too is seeing some kind of a consolidation at the moment. 55,700 on the upside, 55,300 on the downside happens to be your consolidation zone. I think PSU banks will see another leg of rally, and that can lead markets, especially the PSU basket and the Bank Nifty, to test somewhere around 56,000 on the upside. So slightly more bullish on Bank Nifty. Stay away from Nifty as of now.
Thanks for that view coming in. Ruchit, very quickly before we let you go, we have only 3 minutes till close tomorrow. What do you think is going to steal the spotlight tomorrow? Is it going to be the benchmarks? Is it going to be the broader end of the market?
I think it will be the broader end of the markets, because the overall market bet still remains positive in spite of the consolidation that we've seen in the benchmark index. So I think taking a stock specific approach would also be a good trading idea for tomorrow.
Gurmeet, Ruchit, Aditya, thank you so much, the three of you, for joining us and sharing your outlook on where the sectors are headed and what the market construct would be like tomorrow.